Do you want to know about bad credit loans for small businesses? In other words, the best loans for companies with poor credits? Then you want to stick around till the end of this show. Welcome back, folks, to another edition of the Awesome Sweetie Kiwi Show. How you doing today? I hope you are doing fantastic. Today we are having a wonderful roundup of the bad credit loans out there. If you are doing as great as I am, go grab a cup of coffee or tea or vodka and let's roll. Number one. First of all, I just want to say that we conducted an in-depth review of the leading bad credit small business loan companies, and we looked at the key factors including customer service ratings, loan options, and qualification requirements. So what we're giving you today is the result of our research. Number one, Bluevine. Bluevine is kind of cool because they since 2013 they have delivered more than $7 billion in financing to over 125,000 small businesses in the United States, including businesses with poor credit. So the lender offer invoice factoring credit lines of up to $5 million. In terms of the highlights, they do invoice factoring lines of credit, term loans, and they require a minimum FICO credit score of 530, maximum loan amount $5 million, and they have a Better Business Bureau rating of A+. The best features is that they do invoice factoring credit lines as large as $5 million. Think about it, $5 million, and they will disperse the funds within 24 hours. Number two, Biz Credit. Biz to Credit. Now, Biz to Credit is an older platform. They started about 15 years ago. They actually started in 2007, and they offer lines of credits, merchant cash advances. In terms of minimum FICO credit score, it kind of varies, but it's around the 500 range. Maximum loan amount $5 million, and they also have an A+ in terms of Better Business Bureau rating. The loans will come from a network of financial institutions. So this is a platform. This is not a bank. So they actually aggregate several offers from several financial institutions, and they will match creditors with the borrowers. Borrowers are matched with loan options, and they offer a wide range of loans. So this is kind of cool if you're looking for a short-term bad credit loan for your small business. Next, we have OnDeck. This is an online lender which provides small businesses with term loans and lines of credit. The company has extended nearly between $10 to $15 billion in loans using data analytics and digital technology to assess the creditworthiness of borrowers. So this is a company that is combining technology with what I would call fintech with traditional creditworthiness evaluation processes. Loan types are lines of credit, term loans. In terms of, they have not disclosed the minimum FICO credit score they require. Maximum loan amount is $2 million, and they have an A+ from the BBB rating. In terms of, so they offer, the loans are up to $2 million. It's kind of cool for product availability. So if you are a small business there with poor credit, you're looking for a loan, OnDeck is a great option because they have a wide catalog of loans. Then you have Rapid Finance. Rapid Finance offers lines of credit, merchant cash advances, and small business administration bridge loans from $5,000 to $1 million. Great thing is that the approval is really fast, within 24 hours, and the funds are dispersed within 1 day. So loan types include bridge loans, invoice factoring, lines of credit, merchant cash advances, term loans. So you can see here again we have a variety of funding options. Minimum FICO credit score ranges from 450 to 700, so they're kind of cool also. In terms of Better Business Bureau rating, they also have an A+. So the great thing here is that the loans charge monthly fee instead of an annual percentage rate. So you don't have an APR if you go with this kind of loan. You are actually charged on a monthly basis, and that fee would fluctuate based upon a benchmark or an index. Smallest loan amount is $5,000. I think I've kind of said that before. So here you have it. The first four options when it comes to bad credit loans for small businesses. You have Bluevine, Biz to Credit, OnDeck, and Rapid Finance. I'll be right back right after this. Do not go anywhere. Welcome back, folks, to another edition of the Awesome Sweetie Kiwi Show. We are still having a conversation here around the best loans for companies with poor credit. If you love this kind of content and you love the clarity and quality of the show so far, please consider subscribing to our channel and turn on the notification bell so we can inform you in real time whenever we have a new show. And you can also like, share, and comment below. We'll answer all questions as long as the questions are pertinent or relevant to the topics discussed. Number 5, Fundbox. They offer a line of credit. Fundbox, the great thing is that the cash can be available by the next day. Low minimum credit score requirement. The rates, however, the APR is kind of high compared to traditional banks. I think that's kind of illogical here, because if you're talking about the loans for a company with poor credit, then the lender has to compensate for the risk by increasing the APR. So the APR ranges from 10 to 80%. You heard it right, 80%. And minimum credit score at 550. That kind of varies also. The great thing here is that it's kind of easy to qualify. So the Fundbox requires you to connect your accounting software and bank account. So the company says its software is compatible with over 14,000 banks and financial services companies and the following accounting software platforms: QuickBooks, FreshBooks, Xero, so Xero meaning Xero, Harvest, Clio, Invoice, ASAP, Sage One, Cashew, and Jobber. You don't have to give any personal guarantee. There's no personal guarantee or collateral. So especially when the lines of credits are under 50,000, and that means you're not personally responsible for repayment if your business fails to repay a loan. Also, Fundbox borrowers don't need to provide collateral, which is a physical asset such as real estate pledged as security for a repayment of a loan. Now, the great thing here is that if you're listening to me right now, you're kind of interested, you have an early repayment flexibility. So the company Fundbox allows you to repay the line of credit early to save on fees, and those fees can be huge. As I said, it can be humongous. You're talking here from 10%, as I said earlier, to 80%, 79.8%. That's kind of crazy, but yes, there is no prepayment penalty for doing so if you pay early. The funding tops out at 100,000, so the financing is kind of limited here. So this could be a problem for a small business that needs more money. So businesses that need to borrow more than 100,000 may find a better fit with Bluevine, as I said earlier, which does invoice factoring, and they provide up to $2 million in financing. Next up, we have Kabbage. Now, Kabbage with a K, not with a C, and they provide a lot of credit. Their APR is kind of crazily high. Also, you're talking from 24% to 100%. And minimum credit score as of the date of this show is 560. So you got to have 560 to qualify. And minimum time of business, 1 year. So they want you to be in business for at least 1 year, and you got to have annual revenue of at least $50,000. They provide fast loans for business owners with bad personal credit, but rates can be high. As I said, financing is up to $250,000 available within a few days, and they accept low credit score. Some of the requirements here is that you need to have online checking or a PayPal account to verify cash flow. So they want to verify your cash flow, your cash inflow and outflows. And they have a fixed fee structure, means that early repayment does not save interest. The thing here is that you gotta think about why you need Kabbage. Now, Kabbage can be great if you want to have fast access to cash. It's available to business owners with bad credits. The thing here is that if you want to make a decision, again, depending upon your business situation or your personal situation, you got to think about not just the cost of borrowing. In other words, the APR. You got to think about how fast you can get the cash, and Kabbage sort of allows you to get that. You can get the cash really fast, and remember that the application process doesn't require paperwork. Instead, you simply connect a business checking account, bookkeeping software, or payment platforms such as PayPal. You can also give the company access to your other accounts such as QuickBooks, Zero, Etsy, Amazon, eBay, or Square. What they're trying to do here, and customers can also request a Kabbage card for no additional fee. So every time you make a purchase with a card, you will pull directly from your line of credit, right? So this is kind of important. So now this can be fast and convenient. Make sure you spend carefully though, folks, because each transaction has associated fees. As I've said before, you're talking about, the thing is, a lot of customers have complained about Kabbage's fee structure because it can be complicated. Each month you pay back a percentage of the amount borrowed, the principal plus a fee. For a 6-month term, you'll pay a fee of 1% to 10% of the total amount you borrowed for the first 2 months, then 1% for the remaining months. So the structure is kind of similar for a 12-month term. So you'll pay 1 to 10% for the first 6 months of your loan, then 1% each month after. It's a little complicated, so make sure that you read the fine prints before you sign anything. All right, I'll be right back right after this. Do not go anywhere. Welcome back, folks, to another edition of the Awesome Sweetie Kiwi Show. So I've given you about 6 bad credit loans for small businesses. Let's just have a quick general conversation around what we're talking here. What is bad credit? When we talk about bad credit, what is it? Bad credit is a FICO score that falls below 670, which is a fair or poor credit score. You typically need a FICO score of at least 530 to qualify for a bad credit business loan, but you can get better terms with a good credit score of 570 or higher. This is kind of important. Now, your personal credit score, not only your personal credit score, but also your business credit score may be a factor in whether you get a loan, particularly from traditional lenders, right? Because the lenders are looking at your risk profile as a whole, not just your business risk profile, but also your personal risk profile. Can you get a small business loan with bad credit? Of course you can, but you have to be very careful. You have to do some research because, again, as I said earlier, traditional lenders such as Bank of America, American Express, Citi, JP Morgan, they are not going to give you those loans. What small business financing can you get with bad credit? You can get the whole 9 yards. The catalog is kind of diverse. I'm talking here from term loans to lines of credits, equipment loans, invoice financing or factoring, merchant cash advances. By the way, a merchant cash advance is an advance on your firm's future sales and can deliver quick access to capital. You'll often repay the advance as a percentage of your daily credit card and debit card receipts plus fees. Lower risk borrowers will have lower fees and more favorable borrowing terms than higher risk borrowers. Of course, that makes sense, right? Still, a merchant cash advance is often a poor choice for a business. Beware the long-term financial implications of using merchant cash advances. All right. And one thing I also want to say here is that equipment loans, I kind of mentioned that you can get equipment loans also when when the business has bad credit, but in that kind of scheme is also a little delicate. So you have to think twice, because in a typical equipment loan scheme, a lender typically finances 80 to 100% of the cost of your equipment. The equipment acts as a collateral for the loan. Alternative lenders may be more likely than traditional lenders to offer equipment loans for small businesses with poor credit. So, how can you get a small business loan? Because the idea here is that your company might be currently in a bad situation where you or the company has poor credit. But the idea is for you to turn things around and have a great credit score, right? The 6 months or 1 year vision here is to come back into the green zone. In other words, you have a credit score that is above 670. So how can you get that? If you want to get a small business loan, you want to improve your personal credit. That's very important. You also want to build your business credit score. In other words, sometimes one thing you also want to do is you want to write a solid business plan that allows you not only to implement a better vision for your business, but also impress the lender. You want to project an air of positivity, an air of confidence around your business. So a business plan can help you do that. And there are other ways to boost your creditworthiness. For example, you got to ask yourself, do you really need a loan? How do you plan to use the loan proceeds? What collateral, such as business equipment or other assets, would you pledge? And the thing is, you got to ask yourself whether your business has applied for other loans. And when choosing a loan, please make sure that you look at the loan options. You want to look at cost, things like customer service, the eligibility requirements. In terms of requirements, I'm talking here about minimum personal credit score, minimum years in business, minimum annual revenue. So you're trying to make sure that you are matching yourself, you're matching your business with the right bad credit loan for a small business out there. And when I'm talking about the cost is also very important because there is a wide catalog of cost. I'm talking, and here the cost run the whole gamut from annual percentage rate, APR, to down payments, factor rate, origination fee, underwriting fees, closing costs, and additional fees. Now, those can eat into the amount of loan proceeds you'll finally get. So, for instance, you might qualify for a $100,000 loan, and in the end, you only get $90,000 because the fees are just so crazily high that they have eaten it away from the net principal you're actually getting. Now, guess what? Even if you receive $90,000, you still are liable for $100,000. One thing you want to also think about is if you are ever denied a small business loan, there are a lot of things you can do. You can lower the loan amount. You can add business partners because you're trying here to strengthen the credit worthiness of your business. You can also seek creative funding. Think about asking friends, family members, private investors, and potential customers to invest in your business. You can seek funding through a crowdfunding campaign using Kickstarter, GoFundMe, or Indiegogo. So the choice is really, really large out there for you to think creatively about raising funds for your business. All right. One thing I want to say before I close here, don't forget customer service. I've given you 6 companies here that cater to companies with poor credit, but you want to really do some research around the customer service of any company you want to go with. So you want to read reviews, you want to read lender reviews to find out how businesses rate the products and the customer service each lender offers. And that's kind of cool. And 2 good review sources for alternative lenders are Trustpilot, which rates companies based on an aggregate of customer reviews, and the Better Business Bureau. Good luck, and thank you for listening. I will see you next time, but until then, remember, stay marvelous.